Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
I had mentioned over on Charles's show, because there was somebody, I think right off the top, she was saying like, oh, small caps, mid caps, and small caps are the place to be. And that's all well and good if you're running $1 gazillion and you really need to get positioned over a long period of time. But it sounds trite because everybody says this. You can either be right or you can make money, but you can't do both. You actually can do both. That's the idea. Is like, hey, I'm buying this stock because it's going up. And then when the stock does go up, guess what? You're right and you're rich. But it's when the market is going against you and you're insisting, no, I'm right. And maybe you might be, but your timing might be off by 5 years. And yet still you're insisting that you're going to be right. And so just keep in mind the difference between the two. There is a timing component to trading. If you've got your money stuck in some stock that's not moving anywhere, and it hasn't been for a while, then that's just dead money. That's lost money. You might as well not even have it because it's not doing you any good. It's certainly not growing. And so the way you can be right is by being in with the trend. And one thing I learned a long time ago is if you take a trade and then it moves against you, proving to you that you were wrong. Now, what a lot of people do is they say like, oh crap, I'm wrong. I'm losing money. I don't want to take a loss. So then they hope that the stock turns around. And then sometimes it does. I would say that's the worst thing that could happen is somebody loses their discipline, lets a stock fall into a losing trade, but then magically it comes back and they wind up making money. Because what that does is it ingrains in you this idea that, hey man, if I just hold on long enough, the trade's going to come back. And then they don't. Because why? Because you got in, you thought the stock was going up. Turns out you were wrong. The stock's going down. But you're not acknowledging that you were wrong. You're insisting that you're right just a little early, or maybe just a little late, but it's going to come back. So turns out you were wrong, and the chances are you're going to stay wrong. The only way to be right in a situation like that is to flip. Say like, okay, I thought the stock was going up, but it's going down. I was wrong. Okay, well, I don't like to be wrong. How can I be right? I can say, hey, you know what? The stock's going down. I don't want to be long this stock. Now, you could say, yeah, but then what if it turns around and goes back up? All right, well, freaking buy the stock back again. Just don't let that happen too many times. Like, I mean, my rule is if something like that happens to me twice, there is not going to be a third time. I'm just going to go, okay, I'm not taking this personally, but I obviously have no feel for this stock, or the stock is just not really tradable right now. I thought that it was, but it turns out that it's not. And I'm tired of losing money on this. So, hey, maybe I'll find someplace else to lose money. But you don't want to keep going back to the same thing. You know, it's like marrying the same girl or the same guy 5 different times. I mean, after a while, you got to look and say, I don't think this relationship's working. And so stocks can kind of be like that. And all it costs you is the money that you put into it. So we want to always be focused on being right and making money. So right now, I just kind of showed you the charts. The S&P and the NASDAQ are the strongest. When I'm saying be patient with the winners, hey, as long as they're working, then let them keep working. And I was also saying, like, I wanted to mention this. I'm talking about watch lists and how many things you can put in your watch list. I think it's, and nobody on nobody on my end of the mic or Scott's end of the mic talks about this stuff, but your time is worth a lot. It's worth a lot to you. It's not really worth very much to me. I don't care if you're on the website all day long or whether you just check it once a week. I don't care whether you're trading a lot or whether you're trading a little, because that's it's your life and it's your job. And some people, I was talking to, I was talking to Charles during a commercial break. He asked me how business is going and all that. He's a really nice guy. And I was talking about this time element, how some people I think do better if they're not trading a lot, but just kind of stick with the ones that are working. But some people don't want to do that. They have to be trading. They have to be trading every day. And I was saying how a lot of people want to make sure that they're trading, but then they also have to have plenty of time for their family, for their dogs, for their health, for having something in your life other than just trading. And that's really important to a lot of people. And Charles said, yeah, but you know what? For a lot of people too, for traders, he said, trading is their life. And so they get bummed during a 3-day weekend. They're looking at the market first thing on Friday morning of a trade shortened day, rather than just saying, you know what? I got 4 days off. I'm going to just go ahead and relax a bit.
If you're getting value from this podcast, click the subscribe button and sign up for Dan's free daily videos at stockmarketmentor.com.
They can't do that. And that's okay. That's okay. That's me a little bit, not so much as I used to be when I didn't have a family, but now I do. And so what I'm talking about here is having some kind of balance. And you individually, each of you, you need to decide what your balance is, because some people are total market junkies. And I mean that in every fond way. Other people are not. And so you have to figure out where you stand in all of this stuff, because it will ultimately impact whether you're making money or whether you're losing money. But do not feel that in order to make money, you have to be totally focused and constantly looking at the market, constantly looking for stocks. Got to move my money around, got to keep my money moving. If you're doing that, all you're really doing is giving yourselves an infinite number of opportunities to be wrong. Like, oh, I'm right about a trade. I picked up 6%. Boom, I'm out of here. Now let me find something else. Okay, if you were right on that stock to get 6%, hey, maybe you'd have been right for 16% or maybe more. But instead, you got impatient. You got what I call the can't help it. You just can't help it. I got to do something else. Don't do that. If you look at any chart, you'll see that I'm talking about stocks that are moving higher. The biggest gains are gains that happen after you've held the stock for a long time. I'm holding a stock for more. I have a nice profit on this stock, but I'm holding it for bigger gains because I like the way the stock's trading. You'll notice I didn't say hope. I like the way the stock's trading, so I'm just going to let this thing work. That's the way you want to be trading. And that's true in day trading or investing on a monthly chart. As long as the stock is working, you let it continue to work rather than try to get an independent chance where you have frankly, an equal chance of being right and being wrong. So just be mindful that time is a big issue for you, not just time in the stock like I'm talking about here, but the time that you're spending in the market. And you want to be mindful of how many hours a day, how many hours a week am I spending on this? And then look at how much money you're making and say, well, is this really worth my time? Now, that's if we're just mercenaries. and all we care about is making money. But that's really not what we're doing here. We're learning. We're trying to become more adept, more successful in the market. It's like so many businesses, most businesses are like this. They start the good businesses, they start off like this and they go up a little bit, and then up and down and up and down. But generally the trend is here. And then at some point they hit a critical mass, and that's when the acceleration starts. That's when the rocket ship starts. And so if you're really struggling, you can absolutely get to that point. It's just not there for you yet. And so if you have that kind of a growth mindset, the time that you're spending it's more important to you than money, because if you've got a $20,000 account, it's not going to be, if you say, well, I just want to be a full-time trader. Okay, you better rob a bank, because you're not going to do that with 20 grand. So what you want to be doing is always be looking at what you're getting, the value that you're getting for your time. And again, it doesn't mean that you got to be demanding money. There have been plenty of times, years, when I have gone without, I lost more money than I made. I wound up negative on the year, but I learned so much that ultimately all that stuff has really served me well. So just be mindful of what you're doing every hour of the day when you're looking at the market.
Thanks for listening to Fitz Factor with Dan Fitzpatrick. If you like this, then you'll love Dan's premium service at stockmarketmentor.com, where you can learn how to trade stocks, options, and cryptocurrencies. Click the link below and get access to real-time trading alerts, a community of traders just like you, and live training sessions each week. Get the trading edge that you need at stockmarketmentor.com.